Basically, this is what I was saying in the morning. The return to the support of the blue bar, just like a blue line, I think you can offer a short-term trade, enough that can profit off of the return to the blue bar and let the rest continue through the high of the blue bar. May take a few tests to get through the high of the blue zone, but it remains the short-term target for this multi-low zone. And then, of course, you can see right now we're breaking right through that range right there. And oops, actually, that. Sold a contract right off at that high. What I'm doing, the MNQs. A little bit of a momentum trade buy, but I knew it was going to break out like that. And basically, I was already in on NQ from the bottoms, but I'm just going to take a picture of this for the chat for the first trade. NQ, I did this. The majority off. Even reversed it down and then reversed it back up. Then I made coffee. A little bit sloppy on it, but it's all profitable. But basically, looking at this, the way that we were last week, the channel that we were in was like this, and it was being used, quite well, staying in that channel quite well, and effectively broke out of the channel, retested it. Welcome, welcome, whoever just joined, and morning, happy New Year. And then, yeah, so I was just basically going over how this was the range that we had last week, and we broke out of it basically very slowly. It was borderline terrible. Anybody that was trying to get exposure to the break of the downtrend, this is what they were given. It was really really tough, right? Like, and it just broke up back to just to the point that was like, I guess you could say it gave them relief, just to the point that they could get relief, and it was the high of the node to the bulk of the trading volume. It came right back up, and otherwise, stopped everyone that had a short out, unless they caught the spikes and wicks from the highs before then. But then what I found was really interesting, and actually really common, was that this range, it it kind of became not used, and then we broke down and we used it again. And I found that that was quite interesting because the line that we made that was our downtrend, I identified with the red yellow line. Look at how it hit it like that. And I was like, wow, that's shockingly precise for a line that's drawn very particularly, because you can see there's a little bit of a chop through it there, like you can see. And effectively, these untested B points are still, they remain. And see, they weren't hit at all. So now when we go down to where we are right now, it's like we've done another leg down, another drive down, you could say almost. And it just so happens to be that we've used this bar yet again from last week. There's a few lines that I removed just to, like, clean up the chart a little bit there. I do find the value, like there's a lot of value in the horizontal lines. Um, the white dash line is one that's really particular to me as well because it is the old all-time high. So like the old all-time high on the daily that we had for a prolonged period of time, that was the high, and we've been around it a lot. And just to give some perspective here, this is what we look like on the daily, you know. And some of you may remember the post that I made about this high. Ignore all these lines, but essentially these ones here, those that are late are, paying the price for not being in, essentially. And this is what the daily looked like. This was the daily, and I was like, buying up here is high, like I've said, to hold for so long, reap the benefit if you listen. If not, you're late. And it'll be more difficult to maintain a long trade from that daily chart. It's cringe, and I don't endorse it. So basically, look at how it's been treating them. That day right there, that day was this day. Notice that the other time that we fell down, right? It came down, and I distinctly remember that it wiped every single bit of advancement out since that day, since the day that I made this post. So it's kind of intriguing there. So a little bit of volatility at the open, nothing too crazy. Uh, we have VWAPs all the way up here. We can see they kind of stretch the chart, but it's okay for now. I just like to have them for some perspective. We can go ahead and actually take a look at where the lower bands are in this. May be interested in actually having a test of them. Like I said earlier in the post, I'll get it out as well. The little bit of an additional uh, portion, and I'll read it out here. See, the market is chopping at the open, kind of stagnating. It's okay. Shouldn't be for long. I think it can offer a short-term trade. It can profit enough off the return to the blue bar, and let the rest continue to the high of the blue bar. You know, and it may take a few tests to get through the high of the blue bar, like we're seeing now. It's like bashing the crap out of it, and it remains a short-term target for this multi-low zone. The high of the blue bar is a threshold that, if broken, can threaten a larger retracement into this big dump that we've had here. So basically, after that, I said the high of the blue bar is the threshold that, if broken, can threaten the larger retracement. If you're long below the old all-time high and holding and hedged, there's no better way to be positioned. If you have a side account, capturing the reversal is my short-term interest. Keeping the stops at the extreme is key to having as much flexibility to get to those targets. It's working out really well at the moment. And basically, those all worked out really well. Still think we're gonna get through that high though ultimately, but I don't want to completely remove that. But instead, this top here, just gonna put this here. That was the trade. Forgot to take a picture of it and post it. That's okay. That's after the fact. All of the information that you need to take the trade and benefit off of it is there. I'm just basically gonna post this as like a app. What happened, which is all really good because the market's moved, quite considerably ever since the dump. That's the bottom level there. We can see we've created a little bit of a B point in here. Might be interested in getting that on the short term, which is absolutely okay. Now, we can also see that, that there's two blue lines here. I actually thought that the top blue line was the high of the blue bar. But when I do that, makes a whole lot more sense now because you can see the top was actually the yellow and orange line. That's the top of the consolidation. And the blue bar does go on forever, effectively. And this is a different blue line. What I'm going to do is I'm actually going to change the color of that to like a darker blue. That just goes to show that it's not exactly that uh, same color, and it's not related. So we can actually apply some fibs on here. Just like this high was hit, we got a couple more in here now as well to consider. A little bit of a response off the 188 there, not much. See, the ATRs finally increased a little bit there to 11, the average candle size increasing. Still not really finished with the open volatility yet, so we could see some changes in volatility as things settle down from the open. Still is good to be a little bit, you know, patient with the way things are, because it is kind of like you know, a drastic move in comparison to what we've been seeing over the past, previous couple weeks. Like, it is the case that we started the day already having come down. So we know that it's not because of the people during market hours that created this sell off, but coincidentally, it was the people that aren't part of the stocks and options trading public that decided that the market should be down and everybody else has to deal with it. Interesting. But that is the case. And, you know, now it's the case as well that we can say that many people will not effectively be able to obtain an attractive short position because of the fact that the market started seemingly low. And people would have to defy their buy low, sell high, or sell high, buy low in order to actually take part in this. A lot of people will be trying to catch the dip, and today's been full of pitfalls for those people that are trying to do that essentially, unless we can find that absolute clarity like we can find with the chat there. Yeah, the ETR being at where that's at in there. Yeah, it's nice to, effectively let it play out a pattern. We get to see the responses. This is the first response that we've really gotten since the open to a 188 200, and you can see it's been really wicky and spiky past it. We've got a lot of uh, chop essentially past it. Everything that we've done initially past that level was bought back up to it. I also want to point out that the Dow is not doing this. Dow is doing this, and the SPY is doing this. Sorry. Yeah, I know, right? It's like, whoa. And then the SPY's doing this. It's like holding a low, like chopping sideways the slow SPY, like I like to call it, right? And then we've got the Nasdaq doing this, completely the opposite of the Dow. Nothing like the SPY. The 261 is the next fib. We've been getting a lot of 241 and 227 reversals. I'm curious to see how it responds to it the first time of the year. Uh, took took some off a little too soon on that one, but that's okay. It's likely that it gets a little bit more chop. I do think that we're going to see this blue bar again today, so we're going to have to prepare for a move back to that blue bar. There is a blue line that's from today, and it's here. We're actually testing it now, short term, which is not a very good thing, to be honest. Getting on top of it is the best thing that it can do. When we get on top of that blue line, you want to know what line we actually threaten the most is this one. And it's not blue, it's going to be yellow. It can take some time to get to it because we can see we've got a lot of space between now and then, which leads me to believe that we're going to have some traps from now until then. Initial positive response of the 261, that is for sure. There's a 188 near there too as well, eh? You can just tell because this distance right here, very similar to having doubled. But that's fine. We know that they're both lined up there. That's fine. In fact, these ones, I see it being a difficult, long drawn out battle for a prolonged period of time. But what's new? See, we have another red yellow line coming up. That's from last week. An old one that has been broken, basically. On with that. Vertical. Just gonna. The horizontal lines can. No. The other indexes may play a pretty intriguing role in the reversal as well. You can see we're at a 227 here, but it's not just anywhere. We actually were we use this as a small consolidation area basically before responding to the high of where we used to trade inside of that little area. Not your normal range, but it is one nonetheless. I am keeping an eye on the other indexes, seeing which moves they decide to respond to. The Dow being the slowest, ironically, up here at the highs, trying to move only up with the upwards moves of the Nasdaq. I looked at Apple, in questioning its relevance towards this move. I know that with more data in the consolidation to come, it will allow us to close in on the thresholds that actually can have the most amount of change associated with them. Like for instance, like I was saying, the high of that blue bar is incredibly significant. I mean, we can see why it's, the short-term target that I put in there. That's exactly what it was, and exactly where the market was signaling to me that it wanted to go. And, that was very clear. I find it ironic that on the most recent upturn, the Dow came off a little bit. Just want to check out where the dollar sits at. Strong. Enough of a retracement, perhaps. This reminds me of that really strange phase A that we were seeing the other week when there was a pretty significant gap between the preliminary support and then the selling climax. Usually we would get it, it would look like this for phase A, but I mean, like, this kind of crap is what we were getting last week. And if it wants to make a phase A out of it, that's absolutely fine. What it would look like is another test of the 188 from the underside, which is not uncommon for when we blow through levels like that. We do like to test them from the underside. And I do remember, something similar. Um, here, fighting for volume in the reversal back to the blue support line, because ultimately I think that's where this consolidation leads, is to come back and test these downtrending lines from the underside. That is the 261 to the bigger fib set, which we can see it's pretty much gotten through this old red yellow line in order to get there, which could just be wicks and spikes, to be honest. The red yellow line will typically get more tests than what it's just shown. So it just got a test right there. Short term, play it up to test the support. Tested it, took off a chunk there, a big decent chunk. By the time that it's here, now it's running that account, I can basically switch to a different account. If it comes back to get me, then I can come back and work on this one. But this one's done for now. Come back to it later. I've also got 10 MNQs on that one. And then I just want to point out that the Dow and the SPY are acting differently again. We've got this, the Dow participate, or sorry, what am I saying? This is the SPY participating in this run here. That's working out really well for them. Oh, sorry, US 30. This is the Dow Jones. You can see they didn't really participate much in the downwards moves, but damn, when the Nasdaq starts going up at any given time, we're interested in going up on the Dow. And what is that? And if anybody does know what company that is interesting, we'll take a look at them. But I will find out. The 261 getting a very, very, very strong response. So we can see that that is the very low of the chart. Good spot to consider trimming some off and take some out. Of course, we do have a B point down here as well. No stops are safe above it. Any stops that are dragged above the green dash line are subject to getting stopped out. Doesn't mean you have to target these levels, but they are untested levels. Two uh, uh, bearish harmonic patterns. Now I just want to go over the harmonic, not the harmonic, sorry, the Wyckoff that I was talking about. We went into this, right? Remember I was telling everyone about that, and then it used to do this, right? Okay, that's cool, everything. But phase A has been looking like this lately. But what is it supposed to do? Well, it's supposed to get up like it is now. When it does this, it actually comes down to threaten everybody's lows. So it's good to make sure you have some off at that point there too. Yeah, we're gonna be able to get that back actually. It's fine. I'll post this. Yeah. Can't. Drag this open. that, maybe some sort of thumbnail. Oh, actually, you know what? Should have put there. 'Cause this is the post that I put about. And now we will have to watch for getting above that new blue line. It can mean a trip to the yellow above when broken. And we can see it coming back down to try and test that short-term move right there as well. But that's that the Dow is still holding up, not feeling it at all. What's going on there? I know, it's really weird. What's the TSX doing? What does it care about? Okay, it's moving like that. It's trying to move like the Nasdaq, which is funny. Trying is the right word. But falling through. Watch the 61 now. Watch out. We got to go get the fibs out from the low to high here. We're approaching the 61. That's going on there. It's also a 5-wave move on the short term. You can see we started to go down here. We went up to make the green candle. We went down and then up to make the green candle and then went down again. And we're like, what is that? That's this. You break it down. And I'm like, well, if you look at what that was, it was treatment to the blue line. Like, notice that it came down to test the blue line, and then it came up to test the blue line, and it was like all about the blue line, like making an S wave around the blue line. And I mean, like every time we've done that, we've actually subtly done it here. You see the first test down there? It actually bounced all the way up to here, and then came all the way down, and then bounced right back to test the blue line. I'm like suspiciously particular. And then we get this kind of shenanigans next. I'm like, who thinks we're seeing that blue line again? Oh, I know we're seeing that blue line again. I'm like, it's like a trajectory line almost. Great for scalping. A lot of traps, or time for traps. We do have to consider that. Many people will be considering this like an inverse head and shoulders. Now, I didn't tell you guys what the Wyckoff looks like. I didn't have time to bring out the thing today. but I will now. Schematic. Otherwise, so we look at this and I'm like, well, what do you see going on here? I'm like, well, it's a terrible uh, version of this if it is one. But it, ironically, is exactly what I see it doing. This portion, I can see that we've done this, and it's strange. Sure, you could even say that we've done this five-wave move, which I don't think is part of it, but it's like we came into the whole thing on a five-wave move, kind of like that big dump, and I'm like, that's check mark number one. We did that. And then I'm like, okay, this PS right here, where we kind of create the groundwork for the resistance lines and the support lines, where we kind of, create that first notch, in the consolidation that we can respond to. And what do we do when we create that? It's called a preliminary support, the PS, or it could be the PSY when it's reversed, but preliminary support, I guess for short. And we dump off, right? Basically, we make this downwards move. Sure, we had a little bit of a hiccup down there or whatever. That's fine. But at the end of the day, it did go down, and that's what it did here. And then it went back up, just like it does here. And it's like, well, in the schematic, what I've come to know, like understand that it does is like it makes this notch so that it can come back and return to it. Because is it not true that when it does this preliminary support, it's with the preliminary support, which is kind of weird because it's on the high, it's not really a support at all, really. Just for this one moment, it's a support. It's that preliminary support, that support that happens before anything else, and then we dump down off of it. We actually break it and then come back and test it as resistance. And that's the movement that we end up doing right there, And in some cases, if it comes right back up into it, that's absolutely okay. And basically we end up with a move that looks like this for phase A. Okay. And what we were doing today, I thought was kind of funny because it kind of looked like we were doing this originally, like really, really not you know, coming back all of the way like we really should, and when we finish this move, we ultimately have a sell off, and that could be this move. Like after having run back into this preliminary support, it takes a hit. And I mean, that's the whole process of phase A. you know like we're just looking at here, like screw all this stuff as for now. Essentially, this is pretty much the only thing we're looking at, and the fact that it does this thing here. And I'm like, okay, so have we created this preliminary support? Have we dumped off of it? Have we come back to test it? And then after having tested it, did we sell off? So it's like, okay, we made the preliminary support, we sold it off, we came back to test it, and then we had a little bit of a dump off just after having tested it. I'm like, can we kind of see that going on here? I'm like, yeah, sure. And I mean, when I see that there's phase A loves to be accurate. This one's not very accurate, but it's kind of doing the gist of it. I mean, it has all of the components that are necessary with a little bit extra. And that's fine. What if it wants to do that little bit extra every single time it does this from now on? I mean, like, could it? Sure. But I mean, I'll be damned if it affects us negatively for it to do that, right? I mean, it's not really a bad thing. It can do it all at once. That's the way I think of it. But at the end of the day, it's not going to obstruct me from seeing the fact that it's got all of the components of phase A, everything from the preliminary support, which is that original notch, and then the sell off, which we had, despite the fact that the sell off was a three-wave move. That's fine. And then we came back to it and then sold off a bit. So I wonder, how far are we going to take this? In AR here, when we do this automatic rally, it creates this kind of downtrend, right? And in phase B, there is this move that like breaks out, and it comes back to test the PS again. And, it really starts to solidify what would be the resistance for the entire consolidation. Now, what's ironic about that is even in the schematic, in order to formulate the support, we need to come back down and test it. And that means that everybody that catches anything in phase A is undeniably at a potential risk in phase B. And, I've got one more better for you as well. There's actually an entirely separate schematic that suggests that it's not all only over for the people that caught that. Because you might be thinking, oh, well, if we catch this, we might get taken out here. But then if we catch that, we're safe, right? Well, not necessarily, because in the other schematic, it clearly shows that these people aren't safe at all either. But it's ironic because it's a big, what would you call it? Call it a like a conditional thing. Let me think. What the starts with a C. Um, That'll come back to me. But basically, in the event that this low does not get threatened again, it is the best point to have it from, no? Like if you think about it, there's like in all of the movements of this schematic right here, the name of the game is to capture movement, right? So how could it be that the largest movements of the schematic are not worthy of capturing? That wouldn't make any sense, would it? Like obviously we've got huge moves on here and a huge move here. Capturing that movement would be the name of the game, right? It wouldn't be to just take part in this stale sideways movement. Because like if you think about really how stale it is, like I don't know if the phases and the letters actually change our perception of what's going on here. But if I just quickly trace over everything that's going on here and then take away everything that we're used to looking at, I'll show you how much of a crappy consolidation this really is. Because look at it without all of the helpful cues and whatnot. So you can see it's basically the same thing as a schematic. I take this away and this is what we got. Brutal, really, if you think about it. Like when I look at this, I can see that we've got a giant consolidation that basically has a channel like that. The channel ends up breaking and doubling to the upside. Is it not a fact that this happens when it plays out properly? So we could consider it or we could neglect it, but it's true that it all comes down to the downtrend breaking. If it doesn't break, it can't play out. Is that not true? So why don't we put more emphasis on the downtrend in the entire scenario? Because we know it's not going to end unless the downtrend breaks. Is that not true? So here's our downtrend right now. We draw another one. We don't have to draw too many, but we've got this one from the top, right? That's the final downtrend. There's no ifs, ands, or buts saying like, hey, we can break every trend we want. But unless that one is broken, we're still in the downtrend, right? So first of all, in order to ever consider this top line to break, we will have to break every other line before it. So we can start with, not looking at every single thing at once and trying to compile it all into our heads at once, but just take small pieces at a time. Like for instance, we know in order to be able to get involved with any kind of indication or any kind of level up there, it's going to have to break that yellow line. Now we know that, with the space that we have right now from here until that small yellow line, there's few patterns that can actually form in that area. And in order to buy ourselves more time with that relatively steep trend, we would have to go down with it. And every moment that we go down with it, we're buying ourselves a little bit more time with it. But, it's like the steeper the trend, the harder it is to buy time. And, it starts to become like, why? Like, do we really want more time with this trend? And whatever time we do buy, is it subject to just being taken right back as soon as the trend breaks? Like, think about it. Here's a visual example. Like, in the event that we bought more time, when the trend breaks, wouldn't it just take back the bought time? Like it makes people fight and fight and fight for something that ends up getting wiped out in the long run. Typically, it is the case that we can see in the past that a lot of the people that were going through all of this trouble, like think about it. everyone that was buying in here, buying in here, buying in here, they all had difficulty here. And it all just came right back to where they had trouble. And, obviously, if they have more patience, the high to the entire range gave them relief. And I mean, where did we see that before? We go back up here and you can see that the beginning of this entire trend started on a move like that. Let's take a look here. Because you can see like everyone was like, "Oh, this is the downtrend. You want exposure to this line? Well, you have to get exposure to the red yellow line to get there." Now, you can see how unfavorable obviously, the day ended, so there wasn't any time left for anybody. But it was unfavorable on how it broke. And you could see that anybody that tried to get exposure for the trend break was ultimately given relief. And I can see that that was the case. And I'm like, okay, then that was how they did that then. And I mean, I can see resemblances to how they did it on the low here. Now the Dow is got has a different kind of to it. I'm curious about that and what company it is that's driving it. Oh, let me take a look here. What's the Bitcoin? Take a look at the daily here real quick. We can see it's almost at a 61% retracement on Bitcoin, like basically very controversial level. This one right here. And it runs out of volume just past it too. Definitely not a place where I would expect to be getting a lot of value out of buying. I think that that ship has sailed, and it might be more interested in chopping, and anything that it does give will be sharply taken back to this point probably in the course of the next couple weeks. But I wouldn't say that there's any pattern that wants to be um traded there. The next major move is likely to be a downwards one, and any upwards move that we do get is likely to be part of some sort of spike in the bigger picture. But let's take a look at this schematic for Wyckoff again without anything on it, just to curiously observe the potential impact of what this is like here, this trend, what it could mean. It's very much like we're in this area here. Well, actually, no, 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 no. Yeah, it's gonna be relatable to one of these points, essentially more so this one. But I honestly think that they're in the process of trying to break one of these kinds of trends that does turn into um, a continuation. But ultimately, it's not something that can hold for a long time. Like usually, people would be like, "Oh yeah, it's gonna make a W. It'd look really good." And I mean, it could. It could make a great W out of this, like if it wanted to. But what the Wyckoff does is crap all over that. It's like, oh well, the W doesn't form, and instead you get this. I'm like, what? But because at the end of the day, W is far superior pattern than the Wyckoff, and I mean, people could be saying, oh yeah, you get many Ws inside of Wyckoffs. Like, what is this? Not a W, and could this not be the daily? And could we not play out for, technically thousands of points off of each one of the Ws and Ms formed, like we can see in here, the W that leads to an M and such. But yeah, yeah, it's got some traps associated with it there too. It's giving me this kind of vibe that it's like, oh yeah, everybody, try and make it a W. We're gonna give you this, and what this does is, I mean, like, imagine you have a trend line coming from a higher point, and it's like, well, we're breaking how many times here? First off, it starts to look like this, and it's all nice and everything. You break, and you get a nice retest, and then that turns into a trend that maybe breaks and tries to retest, and we go through the process again where, that breaks and retests, and then tries to retest and doesn't. Go in here, and that does retest, and then that does retest. And again, again, and then we don't continues, and I'm like, geez, how many times? Like, that's where I get the 11 low zone from, because I'm like, how many times does it make a bottom to break a trend? Like, technically, this is a trend break. This is a trend break. Even this little one here, and it went down for a little bit, so it technically has to break it. And every single time that it fluctuates from down to up, it breaks a trend. And if you're part of every single one of those moves, you really start to feel like, how many is it going to take? How many trend breaks do you have to be part of? You start to think. And I'm like, wow, it's really tough when they make it go like this and they have consecutively new lows. But when they're coming down on lows like this, and it's kind of, on a horizontal platform where there's kind of like one major low and it all sits within that, maybe sometimes wicking and spiking through it, but not consecutively making new lows throughout the entire consolidation. It makes it a little bit easier to maintain. But it is the case that right now we did just have like a fake break. Essentially, it doesn't take any emphasis off of that line. It actually puts emphasis on it, where most people would give up on that line and worry and fear about it. I actually think it becomes a target, um, and it will be seen more. Of course, when we get a fake break to a line, it kind of gives it that blue line vibe where we can test it from both sides, where it can kind of become like a trajectory line, because it's not an effective trend break. Essentially, one of the best ways that we can actually break those lines is, in a hypothetical situation where it's like, hey everybody, look at how clear this downtrend is. It's so great, right? And then when they try to break it, because everybody sees that that's the line, and then it fumbles, but when it fumbles, it can actually, wipe out pretty hard. And it's the next time that it actually gets back to it, where most people would have either readjusted the trend or removed it altogether. So like this new high here, they don't realize that this one is actually still in play. But because it treated them badly before, they take it off or adjust it or remove it. And I mean, like, my argument towards that is I'm like, well, is it not true that this line has to break first before getting to this one anyways? So if you've taken this line and moved it up, you don't even know if it can be of importance or impact in the future. You're not letting it, have a chance. So I'm like, well, what is it? Is it painful to have it on there? I mean, like, can we add both of them? Of course we can, but we know it's a matter of fact that the first line has to break before the second. And the longer it takes, the more we actually start to understand that those two lines are completely different lines. Like, come tomorrow, they'll be way apart, right? We'll probably not be responding to them tomorrow, but it's true that they would be considerably far apart, very, very, to the people of tomorrow, those lines are nothing alike and they don't even look remotely close to each other. So it's a interesting it's a perspective thing because the people of today have a different perspective of those two lines as how they will tomorrow, which is kind of a weird thought to think of. Is it's time that really changes those lines. Because you can say today, those lines are you could say that they're so similar together today that you could say, oh, I could just take this line and drag it up, and there's no big difference. But as time goes on, you'll start to see that that difference is actually there, and it's just neglected because of the illusion that you can drag one line over to the next high, and it's not the same line at all, actually. And I mean, you know what? It happens in this schematic itself here. Like when you first have this first trend break, and then it literally readjusts itself to this new high. And it's like that new high has to go through a completely separate trend break and make it retested completely separately to this new one. Because think about it. At the end of the day, let's say, for instance, it takes like an hour to break these lines. We would have enough time to actually break and retest this line and then go on and actually break and retest that line. Completely different to where if we tried to do it now, it would be a little bit, it's possible, but it's harder. If we tried to do it here, it would be like, okay, kind of negligible. It could be like the candlestick fluctuations would have done the trick. So now it's going to definitely be something that'll be a little bit more easy to see and something that I think is inevitably uh, we're going to have to deal with it today at some point. Points have created in there, but ironically, I think that this blue line here is going to be a little bit more important than points. And you might not think there's much of a difference, but there actually is a lot of a difference. Actually, not a lot of a difference, but if it means that you don't get filled, it's a big enough difference. And if you're trying to get the exact B point, it's just basically saying don't be greedy to me, and I'm like, okay. I mean, like it's like either it's like guaranteed you're gonna make some money or risk of losing some money. I'm like, okay, take the guarantee every time. It's like um, if you have the opportunity to say, right, I've gotten to the blue line and I can guarantee my success, or I could risk it all for this sliver of profit. I'm like, where if we need to take a moment to think about the logic, it's not. It's like what is does it break your strategy to not have it exactly on the B point? I'm like, that's weakness. We can't be like that. So it's like at the end of the day, if you have multiple, it's good to make sure that you have some off at the B point as well, sure, but to make sure you're safe at the blue line is imperative. Now, the more that time goes on, there's a bigger difference between those two levels. Obviously, there's not much of a difference right now, but if it took an hour, that difference might be a point or 2 points. And obviously, that's not very much, but we shall see. And I'm like, I know it seems negligible to even care about that blue line, but I care about it. So let's see what it does.
Not that it's gonna, it's not like a make or break move. It's a tiny move. It's just basically showing me characteristics, that I'm interested in. It's like, well, if it doesn't do it, then why not? Something's wrong with it, you know?
Yeah, the weirdest companies are up on the Dow. Like Amgen is leading. AM their cancer or something. Yeah, it looks like it. This is kind of a big day for them though. To do that must have been some kind of news. Don't really care what though, but hopefully it's good stuff and not like raking money out of people's pockets. Um, this one, they're feeling it too. They must be part of it. And then there's Verizon, which is like, I can't believe that they, which looks like they're part of it too. I'm like, how? Really? J&J too? They're in on the deal? Like, why is it move like that though? It's like they're part of the investment bundle or something. Like, what it looks like to me. Walgreens. See, these companies, they don't really have anything other than the fact that that's not WA. See, that one looks like the Dow. When I look at the Dow, I'm like, okay, there we go. That's something similar that we've. How we respond with the levels. The blue and the B point have separated a little bit. There's a couple different ones in there. Like, I mean, technically that's a B point in there too that's never been tested. That. Now, remember, like I said in phase A is not a phase that's essentially supposed to be the low of any schematic. Like, take a look here. These two here, for instance. Got phase A in both of them, ends right here, right? And then in phase B, in both of them, the ST in phase B becomes the low, and it's the next one that's potentially questionable. Like, okay, well, where we are now is technically this ST in phase B. I mean, like, it could end up to be a really good price, but it might get threatened. What Wyckoff's trying to tell us, and I'm like, all right, fair enough. I mean, like, but it's like basically those that capture this price may be threatened on the next spring, but it may or may not happen. And there's nothing that's different in phase B that can insinuate the need for that spring, not at face value. what I just recognized in here as well, in both of these schematics, it does not refer to the up thrust. Like, you know how it's supposed to say up thrust in phase B? I don't know why they don't name that one. Because, like, look here. Like, they have a UT in phase B right after the SOW. This has a sign of weakness in phase B. Very similar to the kind of secondary test in phase B. And I'm like, well, the other move on the other side of that secondary test in phase B is the up thrust, or otherwise the up thrust in phase B. I'm just like, it's not like they're not symmetrical. They are symmetrical. They can have the same names and reverse them. You don't have to name the other one other names. I'm like, why did they do that? Makes it so complicated. I just want to remake it and tell them to. Because it's really kind of strange that they would rename it, but whatever. Taking a look at some of the other companies that are making some moves today, like the ones that are down a lot. We're talking like Intel and Apple and Boeing and Salesforce and Microsoft and IBM, the Goldman Sachs. Because it's funny because it's pretty like random. Like Boeing and Intel don't have each other unless they do now, but maybe I doubt it though. Apple as well. To be down 3.61%, pretty hefty. Take a look at them. Apple. Where we've ended up on them. Or pretty significant dump. It was like a 5-wave move from the high that basically extended its 5th wave. I do think that we're going to try and test the lows of this volume. I can see that there's like a big chunk of volume that we've had here, and we've basically got right out of the bottom of it without any kind of attempt at testing the low of that node. Intel on the hourly. Sort of a similar situation in the sense that they too had a 5-wave move from the high, and the 5th wave was extended and dumped down even farther. It is true that on the short term they both develop a bullish divergence, as does the Nasdaq, which is more predominant. The Nasdaq's bullish divergence is incredibly predominant. It's like, holy crap! Take a picture of that thing. Take a look at it, because I'll be very interested to see what this one gives a. Well, at the end of the day, it's very suggestive of getting to the blue line. Breaking the blue line is very suggestive of trying to get to the other blue line. The other blue line suggests that wicks and spikes could go past it much difficulty, but what it needs is to be turned into support. And what we could do in order to get that, this like I would say, hear me out on this one. This spike that we did at the bottom, we could get that out the top, and that could be our test. And I'm like, okay, I can see that the spike at the bottom that we did here, like this was raw spikeage right there, and I really look at that as a lot of spikeage below that level, and I can see that we took that to the other side. We did that same thing, and this isn't the first time that we've done that too, because this is how much we spiked beneath here. And I was like, okay then, interesting. Okay, so basically we just got it back to that same blue bar. Let's make sure that everything is golden. Another nice trade. Oh yeah. So now the B points got tested, and what did we do with the blue line? We didn't care about the blue. Well, noted, basically. Doesn't mean the blue line doesn't exist anymore, but the B points have been hit, and I mean it's not like they can ever be unhit again. So that's a fact. The blue line can get hit how many times? Well, infinitely in the future, and still be as good as its first hit, essentially. A trajectory line. Oh yeah, also, I'm like, well, hold on a second with this other red yellow line, which we've suspiciously found a way to respond to it. And I'm like, well, good luck buying time that's significant with that line. I'm like, yeah, we bought some time with it here. But like I said, when we break that, is it not true that the B point is here? And like if we took back, like it doesn't really matter what it does from beyond here. If it takes it all back to this point, does it mean that all of the difficulty of the fifth wave basically was like redundant in a weird way? You know, kind of like the relief will come back to the people from here, because this is where they all started trying. This is where the fifth wave people started to get squeezed, and it squeezed them, and then it made them sit and think about it, right? And then it came back and just was like, well, hold on, you know, a lot of people were offered their average price back, and a lot of people don't take it still. But we have a little bit of an M forming in there too. Yeah, that's can't even see it on this, but there is like a little M in there. It's like a tiny little B. Like, what if it doesn't get hit? Let's take a look. Let's see the data. I think it will, but ultimately, I'm looking to see, you know, what is the next eyebrow raising thing? Because, what, you know, it's likely to happen on the short term. Because I'll tell you one thing, there's a lot going on in the short term right now. Like, it's remarkable how much is actually playing out on the short term. You know, all the B points that we've had for the past hour. Well, not really, actually. It's like since the beginning of the consolidation, they've been hit. This one's going for it right now. Interesting move. Created a little one under here. It like it has a smaller version of what it's just done. The fifth wave is a little bit more elongated. Average wave. hit, or sorry, not hit, but it is, this is basically the same form. I have 1, 5 with a gated fifth wave. I'm going to draw this out the way that I see it. So is it not true that we have all of these moves here? And then we have down here a move very similar in the sense that it made 5 down. Very similar construction of the moves. Like we've got a larger version into a smaller version. And I mean, like, okay, when we did this here, what did we do? We popped up and we hit this blue line, right? Because there was a blue line to hit right here. Now on this smaller version, it's true that we're doing that same upwards move. Literally. Like, we're doing that. And I mean, do we get to see on the short term version exactly what's going to happen when we break through this first threshold here? What happens? Do we get to the second one? What happens when we break through this one here? Does that mean we get this one? I'll tell you one thing, we just broke through this one here and we got that one. So, these two are literally connected. So I'm like, all right, let's see what happens. Yeah, literally, 100%. So I'm just going to move this one up a little bit, I guess. Just to show. Okay. Sorry, just to show this. These are the patterns of the moment. A larger version and a smaller version. Now, this is the example that shows how they're similar, right? Okay, now I'm going to go and just drag this over here. And I'm just going to go and drag this. I'm going to dim it out. Kind of actually leave the big one there so you can compare it. Basically, this is what's going on. And then I'll take it off. See, basically I just drew that in there so that, if you wanted to look at a picture of what it has done and then, measure it against what it is doing, you can see that it's incredibly a smaller version at a completely different level of what it's just done. And I mean, like, okay, what did I mean by smaller version? Well, I'm like, well, let's take for instance, if it's done this move right here, right? Is this a smaller sorry, a smaller version of that one? Yeah, it is to me, okay, because what is it? Well, when I think about it, what makes it the same? Well, one of the fact is they're both going up. Okay, first of all, they're both going up. Check mark. It starts with this one here. Both of them have an upwards thrust, and then this involves a trend break. Like this line literally has to break before we come down. So we have to break that first trend. So when that trend breaks, we go to a little downtrend, and it doesn't take back the whole thing, but it takes back, half of it, a little bit more, maybe 61 of it. Sure, doesn't really matter exactly what it is, but it takes back this much. And when it comes down that much, it has to break a new downtrend. It has to break this downtrend every single time, right? And then when it does that, then we're presented with this next major upwards move, which is the uptrend, the third uptrend in the sequence of it doing the same thing. So at what point is it doing something different? Would be my next argument. And then it's like, well, not it doesn't do anything different. It's the same thing. So with that being understood, now we can say, right, well, it wasn't at the same level that it happened. It was lower. So we know that something of a completely different size, okay, it's good to consider taking some off as well. But yeah. And I just did that at those B points right there. Okay, the best exposure to have was to get to all those B points, and ultimately I didn't want to be left without it. And every target has been fulfilled on the screen. Except, oh yeah, this one up here. That's not part of this little range down here, though. Obviously, getting on top of this blue line is going to be the first threshold in getting out of this area. Like it's true that this is like a little congestion zone, otherwise known as a consolidation. And effectively, it is consolidating in this little area, congested. Now, obviously, it's going to end like every other congestion area, or we'd still be congested in the last one that didn't end. So they all come to an end. Like, or Wall Street will end up having to deal with one congestion area for the rest of mankind. And I'm like, that's just not going to happen, you know? And, there's too much money to be made, so much opportunity to be seized. Okay? But it is the closest thing to a triangle that we've had in a long time. And a triangle is just another way to consolidate, of course. Because when we're in a triangle, we're confined by the barriers of that triangle until we leave. Now, the beauty of a triangle is it comes with a timer, every single triangle in the world, because it always ends at the tip. At the point that it gets to the tip, it cannot be triangulating in this triangle anymore. You could be like, oh, well, it made a little bit of an adjustment and it's a little bigger now. Well, that's truthfully a completely different triangle. Just like I said that these two lines, they don't seem like very far apart. And I was like, hey, if we do this later or lower, either lower or later, it means that these lines are going to be farther apart. And it means we could retest the red yellow line and it can have its own characteristic. And then we could go on like 10 minutes later and retest this red line, and it could do its own weird thing on that too. Maybe it doesn't even retest at all. But of course, we must allow it to retest. You know, it's never good to assume that it's not going to retest and let your guard down instead and just like drag your stop up or something, and then it comes down and retests and you lose your position. And I'm like, I think why? I'm like, to protect yourself from what? You know? Because there's really no good reason. But one thing that could make you do that is watching the profit and loss. Um, takes the focus off your trade and makes it about your money. And that's not what you want to do. You want to have it about doing it right. You want to have it about your plan. The whole idea of why you've gotten into the trade and where you want to take that trade and how you're supposed to take that trade to where you want it to go is really. And your money really doesn't have anything to do with that. You get the money after you consider all those things, right? That's just the way it is. And the more effort you put into those things, and you can focus on putting the money on the sidelines for a second. Like I haven't checked my profit and loss. I'll be inclined to quit. You know, it's like, but why? Because I know I'm gonna find something else to do in a couple minutes. Like another trade. I'm like, instead, you could be thinking about what you could spend the money on, which is completely counterproductive. So, it's not it's interesting because we're human. But at the end of the day, this consolidation, we can see it's come to an end. We've broken through the red line, and how does it retest? Similar to how the yellow one does? Absolutely terribly? Well, that's fine if it does. Now, let the triangle retest as well. Of course, nobody should be buying above the triangle because we assume that it is going to need to come back to test the triangle. And it doesn't have to, but we just allow it to. So that means we don't drag our stops in its path of testing the triangle, because that would be obstructing it from testing the triangle. And we can't do that. Because if we obstruct it from testing the triangle, even if it doesn't test the triangle, um, it can come back and bite you later when it does come back to test it. Because is it not true that as we pass this high, we've left a W and a B point down below? Let's go and get it. But pretty much the high we just came back to test could be tested again from a more respectable fib above. Now, of course, we do have a green dashed line above, and that becomes the elephant in the room right now. Having broken two of the major trends holding us back from being able to get there, what does it look like when we're not held back by those trends? One could say, right? Now it's like, oh, well, I see where that logic comes from. I mean, like without those trends holding us back, maybe we move differently now. Maybe it's not the same consolidation anymore, even though we're at the same level, debatably doing the same thing. It's not with those trends anymore because those trends have been broken and I can prove it. Obviously they've broken. We're on top of them. So I'm like, all right, that's enough of that. We can see that they're broken, and we can see now, is it acting differently and how so? Well, it's moving up like we've never seen it before since it's been in this green zone. Like since it's got into that green zone, it was absolutely toxic for anybody that wanted it to go up. It was like, hey, try and buy in that little chop at the beginning. Look, you've got it. It's going, it's going. And they took it from you. And then they're like, just try it again, And then it's like, well, they have deep retracements. I'm like, well, look at the people that caught this low here and how much volume they have. There's not very much volume in that little area right there. And I mean, think about the people that caught this low and how much volume they have. Well, they didn't really have to come back farther than this original low because nobody really caught that low, and you can see that. And I'm like, well, it is the lowest area of volume on the chart next to this point up here, which lowest point on the chart basically. Yeah, okay. That's interesting fact. No, is it not true that when we go past the top of a triangle and we haven't tested the triangle, we can test it until we pass the tip? So when we pass this tip, is it possible that we test this triangle ever again? Well, how can we test the triangle if it's in the past? Well, we can't, but we can go to the level of its tip. We can go to this, do you think that this node will be forgotten just because the triangle hasn't been tested? No, 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 no. And think about it, like if we have a W and it does that, right? Just because we haven't tested the B point, I mean, it's like we haven't tested the node. It's like it likes to test the node. Here, hold on. Profit here of this press. Not the profit, but the progress. The idea that we have to make sure that the orders are getting filled, and we shoot up at those B points like that. You don't want to be like I mentioned earlier when I was like, oh, it's like so close to the B point. You want to be greedy or something like that, and I'm like, well, ironically, it didn't
pose the threat that I wanted, it just hit the B points anyways. But now I'm like, well, remember what I said earlier. I mean, like, you're fighting for like the smallest difference over what? How much stress is it gonna? Are you gonna signing up for like half an hour's worth of stress before it gets back to that level again? I'm like, no, thank you. Like, I'll take the payment. I'm like, if it blows right through it, you don't want to get rid of the whole position, but just know that having taken some off there, it's like, all right, whatever it wants to do to these people that didn't recognize that as a B point, we can let them, go through their little portion of turmoil, I suppose you could say, before we're interested in rivaling the above blue lines. Now, another thing that I found with a lot of the triangles of last week is that they doubled, which is a really interesting concept because, where they would double from is this distance here. And you want to know one thing that I've actually determined as well is this distance right here is this okay, sorry, this distance right here is actually 61. Did you know that? This distance is 61 of the range. If I put fib channels on there, I can take this, right, and put it on top of the 100 and it would be the 61. Like, I can get the 61 fib channel level without drawing the fib channels in there. Like, if you gave me some sort of rudimentary, like, sticks and stones analytical program that didn't allow me to draw them, I know that this is the 61. Like, watch, I'll put some fibs on there. I know, and it has to do with the triangle, which is absolutely remarkable. And then we go ahead and take this triangle. Notice that that distance here is the distance to the 61. My sketch is a little messed up, but it's true. The 61, and I've noticed this with so many different triangles. That is in a really important distance. And I'm like, well, what's messed up, right? Is because I'm like, oh, yeah, we can take this range and double it and everything like that. But what about this little extra area here? Do we care about it? You want to know what's really funny about that extra area? Right now, we've taken this area, okay, and doubled it. We've taken this original area and doubled it, okay? We've done that. You want to know what this area is right here? That's the distance to get to the 261. That's the distance that we need to get to the 261. Why? Because it's the 61 and this is the 200. So when you put this original area on top of this, you get the 100. When you put the tip of the triangle on top of that, you get the 261 as well, which is a remarkable, between me and God, I've discovered this, and it is, triangles have an incredible relationship with a 61-degree Fibonacci ratio, and I have discovered this 100, which is very, very intriguing to me because it seems to be as significant as any one of the other minor, discoveries that these other people have had, like the Fibonacci ratio itself. But did Fibonacci understand the 61-degree relationship between uh, triangles? Because you want to know what's strange to me, right? Is if I take this right here, and if I put it on top, we get what? The 261, no? Do you not see that that's the 261? What's missing out of the bottom of our triangle? So did you know that when we take a simple triangle like this and double it, what are we doing? Are we doing a 261? Because it's true that we are. Interesting.
I'll leave that in there. And that's it. Beautiful movement right to that 261. Absolutely amazing. I'm gonna go ahead and take a picture of that right there. That in the chat. This is something I really want to go over. I took a clip of it, but I probably will be a chipmunk, and I'll have to find this some other time in a video. But I want to make that into a video. Like, this is a mathematical discovery. I want to call some sort of freaking mathematical freaking combine or something. I don't know. Where's like the fucking senator of, or what do you call it? The the headquarters for geometry or something. I gotta call them and talk to them about that because it is interesting. I'm curious to see if they had that Fibonacci and triangles. But it's interesting because I don't want recognition for it like most people. Like, between me and God, I know I created it. You know, whether or not it's already been found by somebody else, it's like, well, I had the same components to come up with the same thing that they did. You know, and it's like many. You know, so does it, just because they found it first, does it mean that they're any more valuable? I'm like, not really, not at all, not at all. But if you had no recollection that it even existed before and you discovered it yourself, I mean, you have just as much potential as they do. So, at the end of the day, they're not alive. Beautiful. Their work doesn't get continued by a lot of people that just use it as face value. Like, a lot of people, W's and M's, and at the 5 different patterns that they can be because somebody tells you that it's either a crab, a fish, a dog, or a cat, or a shark, or whatever the hell he talks about. But you never hear me talking about those, you know? Like, it's basically, you know, we understand the gist of the crab, you know, but if you ever get the measuring tape out and you actually try to find one actually working with the parameters that are posted on Google, good luck. You know, I can't even remember the last one that worked out perfectly. And everybody's trying to find a really perfect trading strategy where everything works out perfectly. Well, what about this? What about something that requires a little bit of work that makes absolute mathematical sense, where we use the triangles, we use the 61s, we can see that the bottom portion of that triangle out there is literally the 61 portion of what happens in this area. You know, we take this entire area here, like, hold on, like, if I take this entire area here, make it into a square, and then double it, right? Okay, and then I take this entire area here, make it into a square best I can, and then take it on top. Where do we get to? The 261. Obviously my square is a little bit off, but if we leave that original square and take this, you can see that that's the 261. The difference is the 261, which is remarkable. And it did get into my circle here too, which is exactly like the target zone circle idea. But we could see the smaller version played out into the larger version, and it really worked out well. Everything happened by the tip of the triangle. You can see when I posted it in the chat, this was basically the idea. This circle relates to this circle, like this one relates to that one. And I was like, yeah, maybe not this one. We give it a little bit of time. And it literally just went into that to that circle right there. What happened to the music? My my brain waves going here. It was good. What else we got? I gotta get something new. Except hard to find new stuff. Hold on 2 seconds. We can see we've also tested the high of the blue line. I'm going to take this circle off because it's insignificant now. We've more than doubled the triangle now. More than doubled the triangle now, and it's kind of like it's on its fifth wave in a weird way. I do think that this trend starts to become an interesting one. It's still a ways away from it, but we are in the midst of breaking the first short-term support that can, give us an idea of what a trend break looks like in this area. It's not positioned in a really good area, so I wouldn't be rooting for its trend break to be very effective. But one thing that we did notice in the previous weeks is when we consolidated, right? Like we did down here, we definitely consolidated in there. We identified that as a consolidation and everything. And when it ended, it moved out of it more than double. But the move that it used didn't have a retracement. And I mean, we were notoriously moving up on moves like this, right? So if it does pull back the majority of that, it would be like getting to this B point, which I mean, we're going to be close to the controversial fibs there as well. We can see that if I place those fibs on and take the other ones off, we're left with a 188.200 up here that it's been grinding, and I mean, it hasn't been responding very well to it so far. I don't think that that triangle is going to be just doubling, but maybe tripling, quadrupling even. So it's good to make sure that we're aware of that. Yeah, we might see some up then sideways action. Honest. Yeah, see, up then sideways. I even took a quick one on that one. I knew that it was going to be a good test continuation. I'm just letting that other account marinate. Get a little cushion builder in there. Some this kind of music. Feeling it. Crushing the 188. We got the up then sideways. Like I said, up then sideways. It's the way to go. And like I said, we're not seeing what we did last week. This is what we saw last week. Up then sideways is not what we were interested in doing. It came out of the blue, you could say. You could say that almost like people that got it here, and it was like, that's a taste of the medicine right there. And then it's like, well, let's do it again. And it didn't do it. It's suspiciously similar, isn't it? It's almost like they tried to subconsciously set people up for this movement, but no, they didn't get it. And after all, it gave them a lot of time to short it, and then it's just like big increase in volume just through the high like that, and then we pause. We let them like let it sit for a second. People, they go through a very like emotional point at this point. Like think about the people that shorted it and got stopped out on that push. Why is it so slow? Well, because they want them to short it again. Where are they going to put their stops the next time? The 261? Yeah, it's like that's the area we don't want to have to buy at. So if we can get people to short it here, they put their stops up there. It's beautiful. Because it's like nobody that like imagine this. Imagine you have all the money in the world and your task is keeping it. Now, at the end of the day, you want to make, and you have minor control over what the market can do, but you don't want to get caught for market manipulation. Do you think this could be the situation for the people at the top? I wouldn't doubt it. And at the end of the day, so if they were tasked with this, how could we make our existing position benefit without having to force the market higher? Well, if we can create a really small pattern and show everyone that, hey, this is how it works, this is how it goes down, then we create it again. Half the people will think that's what's going to happen. We make it fail. Then they fuel it. They fuel the drive. Like, think about it. I'm like, all right, I'll give you a visual example. Here's a head and shoulders, right? This is a head and shoulders, and it's supposed to go down, but instead, it goes up. And then we go, oh shoot, my mouse glitched out there. So let's say we do a head and shoulders, and then it goes up. And then we do another head and shoulders, right? No, 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 that's a bad example. Okay, no, 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 sorry. I'm going to start off with the head and shoulders working properly. So this is how it's supposed to work, right? Then we go into it, and again, everyone's going to think, oh, geez, same pattern just formed. We're probably going to get this, right? And let's say, you know what? Let's say what? It gives it to them. Let's say it gives it to them. And then the third one comes along, and it's like, well, hold on. We've seen clearly that this pattern It's supposed to make it go down, right? And then it goes up. Think about, everyone has literally just seen that this pattern dumps off the right shoulder. And they saw it twice. So when they think that it's going to happen for them, they short it. Where are they going to put their stop? Like at the head, usually? You think the people that shorted it here will put the stop at the head? You know, the shoulder people will put it at the head. Now think about it. If these people shorted it and put their stop at the head, that means they're going to put buy orders right here. And you want to know what happens right there in my schematic? The trend break. So it's convincing people to put buy orders in, not at the best price to buy, but at the point where the buying kind of starts to fumble a little bit, to be honest. So, like, think about it. Like, if you're buying down here and you get a bunch of people that actually want to be long, and they're forcing it to go up, 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 they might stop buying around here. If you can just nudge it a little bit farther, you can you can hit all these people's shorts and trigger them higher. And they do that. They just did that. I mean, well, at least that's what I see. That, it's like if you watch sports and you see your favorite team play a play, then it's like, oh, I use this play to like win the game this time, and then watch a couple games and you see that play again, you're gonna be like, oh, he's doing the play, and I'm like, well, this is like that. They're doing the play. And they squeezed everyone out. And I mean, I can clearly see it's not the work of, you know, other members of the public, but the work of very precise entities with the power to control the market against the people that are victim to it. And, you know, that's an advantage for us. I think that being able to see the moves before they happen is huge. At the end of the day, the market is at the high of the node right now. This is where we get wicks and spikes, eh? Like, think about it, eh? When we first started here, what did we do? When I was talking about phase A, like, this is the preliminary support, this is the selling climax, this is the automatic rally, and the secondary test. This is how we make the resistance lines. This is how we make the support lines. And it could be that this is our channel to come. Like, we could be in this area as a channel, and it set the groundwork for it. But just remember, inside of the phase A, this is where it makes the resistance. And like, look at where that is, you know, right here on the high of this big volume node. All right, would have been easier to explain without all those lines there, but basically this high right here, it's like we've got our range. And I mean, like, oh, what about this little bit poking out of the bottom there? And I'm like, oh, well, you know what? The bottom bit that we have there, from the high of that triangle to the low of that triangle, it's actually an incredible distance. I'll show you. And like, look how it never even used that distance right there, right? People would be like, what do you mean it's an important distance? It never even used that distance. And then I'm like, you want to know where it did? Right here. Phase A, the whole movement that we had in here was that distance. The distance of our triangle right here was the distance of all of this commotion that we had in here. And you might be saying, oh, what about this? I mean, well, what about that? Isn't that just how much spikeage we do when we do a spike? Is it how much spikeage we should allow when there could be a spike? You know, it raises an interesting question. I mean, like, well, I'll tell you one thing. That is a spike. And it's strayed outside of its comfort zone. Because clearly it was comfortable inside of this confinement area, and that just so happens to be the distance of our triangle. And I'm like, oh, you sure? Maybe there was some other similarities to the triangle in there too. We could have even had the triangle in there. Not exactly, but sometime, maybe next time, why not? So yeah, on a fresh chart, you know, I would take this range into different light. Take a look at this whole area here, be like, all right, that's the whole area. The bulk of all the volume sits within within this purple bar right there, right? And then I'm like, okay, we have a little bit of a spike and a little bit of a pop on both sides of the purple bar. And it doesn't account for much volume. And I'm like, okay, well, everything we did out of the bottom was very spring and spiky. You know, could these be like marked aside as maybe the allotted allowable amount of spikes that we're going to maybe see on the other side of the range? You know, could it be the case that, oh, I'm like, oh, look at how much distance between this and this? I mean, like, are we seeing maybe the need to make that distance? And could it be one of those spikes? I'm like, yeah, of course it could be. I mean, I guess it's not the end of the world if it is either. I mean, like, you want to know what that looks like? That looks like the 61 to me. That looks like the 61 of this entire move down. Let's take a look. It's not really the 61, but it's close. I thought about it and I'm like, going down won't make that 61 go up any farther. Oh, but you want to know what? Maybe it doesn't consider the spike. Maybe it thinks that this is BS. Because I mean, after all, that was this much. And then I'm looking at that and I'm like, well, maybe this is BS too, actually. Hold on. Just take this down to like the thick part of that. Nah, it doesn't help when I do that though. Taking a look at that. Well, either way, it is true and it's undeniable that this is a B point and it's never been tested, not even once, not even tried, never. You can look at that and you can see that that point right there, it fell right through it, didn't even nudge back on it, did it? Didn't even flutter on it, didn't even do anything on it. And I'm like, okay, 288, 300. That's not uncommon, to be honest. We've seen it go to the 300 many times. Another thing I just noticed as well is I'm like, okay, this node up here. Oh, maybe I don't have to draw it in. Maybe it's already drawn in. Wow, suspiciously particular. Is it not strange that that's the same amount of allotted volume that this is? Like I used to. Oh, geez, hold on. Yeah, no, that makes it even more clear when I see this volume down here, and I can see that area there. And I'm like, that is an area that could act very similarly to how this was. Like, think about this area for a second. What was it doing when it was in there? Well, it was the first spike here, which is, you know, that's our average spike, and it was an appropriate one, and it was the first one. And then everything we've ever done since that level has all been a spike and a spike. Everything was spike. And I'm like, okay, and here it could be very spiky as well. Because I'm like, what? Do you think we're going to put as much volume that we had in here inside of this middle area? It's an option. I mean, I bet you they're thinking about it. But that sucks, though. And I bet you they're thinking that that sucks, too. So I don't know if that's going to be the go-to. Because how does that make everybody a bunch of money? It doesn't really make anybody a ton of money. It's better to just not do that. So we'll see if they do or not. I'll be curious because it's not going to benefit too many people to chop like crazy there. The one reason that I could see them needing to do it is if too many people were in the way. And the way of what? The the big trend break, the major trend break. I'm sure they don't want anybody in for that. But I wonder if people have chased this. Because if people chase this, then they wouldn't have pushed it out of this consolidation. Like they tried to advance it again above the B point. Like we know people got screwed on that. Like literally, like it's like, oh, today's a big bearish day. Try a bearish pattern, get screwed, right? I'm like, really? That's what happened. This pattern right here is a bearish pattern at the end of a very big dump, right? And what did it do? It's supposed to go down from here. But just remember one thing, ladies and gentlemen, when we're trading bullish patterns, like we want them to be as far down as possible so that we can buy them up. It doesn't matter if you're trading an M or a falling wedge or whatever it is that you want to trade. But basically, the lower it is when you buy it, the better. Essentially, for the best results. So why would it make sense that people wait for things to go up and then buy them when they're going high up? I mean, who causes the reversal? And do they have a better trading strategy than you do? And why don't you have that strategy? I mean, like, because it's possible, right? That's what it makes me think. I mean, like, it makes me feel like I'm settling for less if I buy anywhere after this trend break, because I'm not getting this portion. I'm getting this portion. And in the environments that we've come back to, when we like to run up on this, right? It all comes from this first initial trend break to be able to get that environment. The first trend break. And usually, this is absolute like hell in here, like to try and catch this. Once you do, it really is a lot easier for those that have caught the difficult part. Like if you find value in trying to get exposure when it's more difficult, then you have it easier than the people that try to chase the easy environment. And it's like basically I see the market telling me all the time where it's like, oh, you didn't find value when it was tough and you want it easy now. I'm like, oh, I remember those lessons when I was a kid, and I'm like, ah, geez, just it just reminds me of like, oh, if there's one way to do it, then just gonna make sure we're doing it that way, or we're gonna have to deal with the repercussions. And now we're at a very controversial point, I must say. Like this could be a spike. This could be the move to the rest of the B point. But I tell you one thing, it's in an area where it gives it and takes it back very quickly. And if it's gonna give it, it's gonna give it fast. And yeah. Now a negative response to this line could be on the table, but let's take a look at the other chart real quick here. Where are all of the things that we demanded it to get to? Wow, it's like I didn't expect nothing to be here. I don't like that. Back to the other chart real quick. It has something here. Yeah, question is whatever happened to that yellow trend line? That is the elephant in the room right now, big time. Hmm? Yeah, it is, it is. Yep. I um I just hesitate to make it the same kind of red yellow that we would usually have because it's been notorious for having negative responses lately. Is that right? Interesting. The 261 to the fib set where this 188 was treated absolutely terribly. I'm curious to see how they'll treat the 261 people. A little bit of positive response is okay. Or sorry, a little bit of a response is okay. Wouldn't be a positive one. Because it's got some B points down below. I just think it's going to be unforgiving to them. Little jabs and quick snaps and stuff like that are okay. So funny that the Dow has been doing what it's been doing and the SPY's caught up now. SPY's doing this. And then we've got the Dow. I still have it on autopilot to type in Pepperstone. Must have used them for so long. Still my go-to when I type in a ticker. It's ironic that they gave, so much difficulty to the people of the morning um, for going long, right? Now the tables have turned. Think about it. You want to know who benefited off of it going down today? People that were already short from before. And that means it wasn't the American public that caused this dump. We all have to understand the market was already down before people woke up. Somebody started the dump, not the American public, not options traders and stock traders. They had to wake up to it, and so yeah, we gotta watch out for these little B points to get hit down there. It's been really good about hitting them, and like on the short term here, but these ones have been left. We'll make them smaller just to identify that they're like smaller. That's fine. I expect the market to be moving completely differently tomorrow too as well. People will look back in retrospect and see what they could have done better today, and they'll try to implement, see, like this is beautiful right here too. All of these getting filled. Just like that. Basically switched over, and that one, as soon as I mentioned it, I got even more. Moment that that became like, oh, it is going to happen. Good to go. Now we can look at these lows up here, and they're also going to get attacked now too. I'm like, okay, well, depends on if you're comfortable enough to trade them or not. It's like that. But I love this pattern. I it's like you won't find it on Google, but it's a triangle. Another one that I created as well, like just like this, sideways, up, middle. We do this all the time. I recognize it like that though. Like it's got a consolidation on the bottom, consolidation on the top, and a consolidation in the middle. Every single time it does that, it's this triangle. It reminds me of when it does a head and shoulders and it gets stuck into this triangulation too. Not a lot of people recognize that as a triangle, but it's very hard for it not to be a triangle when it's at that point. And when I see that, like it's just like a part of me just dies. I'm like, I can't be excited about it as much as you think I can be because it's a triangle at the end of the day. And I'm like, sure, some of the head and shoulders they don't always have that. Like for instance, if you had a head and shoulders that did this, it's not very triangular. But then you could be like, oh, this part right here starts to triangulate. It's very difficult to avoid triangulation. And triangulation is like indecisiveness at its best. Because, what it means is that everything is converging into a tip and every move is getting smaller until it's finished. And I mean, like, but that means the best thing about this is when it ends, you know? And that's like that leads into what I was saying earlier about like the triangles they can have a time limit. Like literally by the time that triangle's finished, it can never be retested, but the node can be. And we remember this node from before. That's when I explained it before. It's all the way down there. But yeah, I mean, we can either accept it or neglect it. I know not everybody's like super into short term, but while we're waiting, it's good to be able to understand it. And I mean, like now you understand why it's done this, and you might see this on the daily. I mean, and you might think, oh, geez, it's doing that thing that we saw that one day, and I'll be like, yeah, it is. I remember, and it is very much a different way of approaching the same thing. Like when we see a W, we all understand that very clearly, but this is a new thing, but it undeniably has components like the first consolidation, the second, and then the third. And as long as we can understand that so long as it's doing this until it's done. And I mean, like, well, God forbid we try to imprint something else over top of it while it's doing this, we might get negative results. So we can either be part of it or wait for it to finish. We can always wait for it to finish if we don't like it. But like I took a little bit of that, but I didn't take all of it, which is fine. I mean, you know, small movements. ATRs can be taking a nosedive. Average size of the candle right now is around 6 points. You can tell it's kind of getting into that tip of the triangle, mode right there, where it can help to take over some of the other angles, like from the other triangles, and see if they're still relevant. The one thing I think is happening right now is our relationship with this line is starting to become over. I think it's starting to become difficult to have a relationship with this line. As much as I think it's, great and everything, but times will come to an end with that line. It's hard to get to it all the time. You can see it kind of leapt to it to try and maintain that relationship. And it's like, how much more of that can we expect? How much more of that can we demand? It's not that we can expect it, but I would say that it would be rather high expectations of it to try and demand such an extraordinary thing out of it. So, you know, if it does happen, it's one of the last few times. So we have to understand that's the case. So I'm like, well, if it's not going to move up on the white line, how does it move up then? Well, first off, it's going to have to leave this triangle. So we can't get ahead of ourselves, right? And I mean, like, well, everybody's got enough time for this triangle to end. Because it's only got like a couple minutes. So let's see what it does when it ends, and if it wants to bring us something new, or if it wants to bring us more of the old environment before the triangle, which nobody wants that.
Yeah, I'll sleep well tonight. That's for sure. Yeah, 1 minute or less remains on the tip of the triangle. Now, I fear that this triangle will make another triangle. What are the odds that this triangle doubles itself? I'll tell you one thing. It's not it hasn't got 61% out of the top of this one. It's not the same kind of idea as that last triangle. Yes, we could take it over and see that the angles are still being used, but it's not the same triangle. And if it is to be doubled, what would it double? Well, it wouldn't double the whole triangle. It would double the range we have here, which is, I'll identify it very easily, just like so. So like this. Yeah, some of this playlist is a little hardcore. Sorry if it's hardcore, but I've never heard it before. Some of it's really good though. But see here. So like that thing right there. Forget the triangle. Well, for a second we'll dim the triangle as it may have value in the future, but the real thing is this consolidation, and you know how much it reminds me of this consolidation as well. Remarkable. I'm like, well, if that's the case, is it not true that this move right here had something to do with this first consolidation? And I can't help but notice that that move happened before this consolidation as well. Like, is it not true that this component came first in both environments? So I mean, like, sure, okay, maybe that doesn't mean too much, but it is a fact. So I mean, like, is it true that this move is associated with this channel, and when we get this move, we could expect this much channel? I mean, like, so far, yes, it is that case. It is that way. I mean, we would be naive to not understand that that's a possibility. So we just want to understand that that's a possibility. And this doubling factor, I think that we did have, is it 3 times the size exactly? I'm curious about that. Another thing that comes to mind is if this would be appropriate, but definitely nothing that I'm going to be trading on. Of course, I just want to keep it in mind that anybody that finds comfort in trading or shorting in this middle, especially, it is in the middle of this last major move. And it is not the extreme that you'd end up with. So it can be a little bit more unfavorable. But if we get back to the Wyckoff, like it's ironically doing it still. It's just taking forever. Which I mean, when I can say that it's a matter of fact that all of the components exist, could we continue? Sorry, could we continue with the rest of the components if we have all the components so far? And you want to know where we are right now? Brutal. Right in the middle. Right here. Right there. Yeah, no, and they're, yeah. Okay. That could be the point. I was gonna argue that this one could be the point, but no. Because we came up off of this ST in phase B. After having done phase A accurately. Yeah, it's rough. It's rough. But if it makes like equally as crappy versions of these other phases and then finishes the entire thing, I mean,
well, we'll just keep track of what phase it could be in and just be aware of what the potential outcome of that phase could be. And if it wants to make a butchered version, a prolonged version, then, we'll monitor for any kind of similarities that we can see. But as of right now, this is the consolidation where they're trying to get people to end their days in this one. You can see that, because why? Because anything that anybody's done for the past 20 minutes has probably negatively impacted them. Like, think about it. Like unless you're going for the small moves and actually exiting on them, like hitting the B points and stuff like that, it's like options and stock traders, like the whole bunch of them. It's very unlikely that this is something to write home about. So, in other words, everybody's going to be feeling kind of adversely about this. A lot of people will be checking their profit and losses and determining whether or not they want to finish the day and stuff like that. That's normal. It's human. You can count on people to be doing that. And you can count on the fact that 40% of them will likely leave. I think that the integrity of the average person, it gets tested in these environments. And I have a saying for that. It's consolidation invites capitulation. And capitulation is when people say they can't take it anymore, or when they fold, or when when you give up, essentially that's what it means. Like that's what it means. Yeah. When you surrender is really more of what it means, because it's like it's kind of a nobody wants to capitulate ever. It means that you've lost, like you've lost the battle and you've given in, surrendered. And like that's the same thing with this is they've capitulated under the lack of integrity to be able to withstand the consolidation. And because it's it's a prolonged period of time where they're not offering any kind of stimulation or remuneration. No payment and no fun. And those are two things that a lot of people show up for. So that's kind of interesting to think about. If it's not giving anybody those two things, then why is anybody there? It becomes the question, what's the purpose of it ever going sideways? If nobody benefits from it, then who would ever make it happen? But it does happen, and we have to understand that it will happen in the future, so it's going to have to be something that we'll have to deal with inevitably. So it's something that we could either be good at dealing with or bad at dealing with. And that's a whole other ball game if you start to think about it like that. It motivates me to be able to think about it in a better way, in a way that allows me to withstand any kind of sideways movement or any kind of uncomfortable situation, because it's not like they don't end. So that's the main thing. Like every other one of those experiences or one of those times that could be relatable to that experience or that time has ended in the past. And it's funny because when something's happening to an individual, you can kind of get tunnel vision on it, and it's like because it's happening to you, it's like that's the world right then and there. And good to understand that you don't have to settle for less. You can be patient for something that's more. And I look at this situation and I'm like, look at the people that did settle for this. And like what is it doing to them? Like are they just like absolutely pulling their hair out right now? Like the second that they see like a dollar profit, they're going to get out and just close the laptop because it's just hurt them so much. That it's definitely the case for somebody out there in the world. Hopefully nobody in here, but the case that somebody's gonna be stuck in this consolidation. It's the 261, isn't it still? So I'm like, well, again, it's it's doing what it did at the 188, and it's got no fast fear here, but it did allow like for more than enough profit. Like that's 15 points down to the other B point there. And what it does give something, it gives it really clearly, really crisp, and it's like it's remarkable that it cares about patterns that are so small. When I could say that it's
the case that literally 90% of the people in the world don't give a shit about these small patterns. It like it can't be the case, you know, like a lot of people are oblivious to what just happened in that small triangle. A lot of people will just look over it, you know, just right over the top of their head, as you could say. A lot of people just wait for it to be finished, which I mean is better than trading it, I tell you that. But there's nothing wrong with that. Patience is key, but understanding when it ends is key. But betting money on when it maybe ends is not a good idea. That's when people are like, okay, so which way do you think the consolidation is going to go? That's a really bad question, in my opinion, because it's if it doesn't tell you, then you shouldn't be trying to find an answer. You know, it's like people are always trying to seek that next trade. It's like reminds me of that scenario where it's like, hey, let's say you get a move at the close every single day for 5 days. Somebody comes in the sixth day. It's like, what's the move at the close? Well, if nothing's showing, nothing's happening, and that's the case. Sometimes with these consolidations, you have to wait until something shows itself before you can decide whether or not that thing is good enough. But until that thing shows itself, this is what we have, and this is not good enough. So I'm like, okay, fair enough. But this will end. And that I have faith in. And I'm like, okay, well, what can we do while it is doing this? And can we agree that this is closer to the end than the beginning? Well, I would say I mean, I can't tell you for sure, but I could say there's a really good chance. Now you want to know why? That's the kicker. Now, is it not true that this is a yellow line coming all the way from the high? Could be red yellow. It's a badass downtrend. It's a big downtrend. It's a huge downtrend many people will have on many different time frames, right? And it's actually the only yellow line on the chart right now, just straight up. And if we look at that, is it not true that we spent a lot of time in this area right here? We like to be in this area right here. So can we be under this trend line and in this area for another hour? Well, nope. We're gonna have to be in one or the other. By this time, it will have to have broken the downtrend, or it will have had to leave in order to have both. I mean, well, it can have both. By the time that it hits this pinnacle right here, this little corner area, it will have to either go down through the bottom of that consolidation to stay underneath the yellow line, or it will have to go through the uh, yellow line to stay in the node. But by this point, you can see that we're going to have to continue going. One of them's going to have to end. And I mean, well, right now, it's happy with both of them, but it's going to be forced with an ultimatum. And time, unless time freezes, right? We're going through that line or out of this range, and you can count on it. So we will be able to monitor both of those things. Why not? If not, you know? So now we wait. And I'm like, I'll tell you one thing. What are the odds it goes all the way to this little tip here? Or what are the odds that it just breaks from probably like some point before here? Good chance that it'll probably break some point before this point here. If it wants to spend all of that time in there, then I guess it could. It's not the end of the world, but I know by that point, 1236 guaranteed, we will have to make a change. The sooner people realize this, the sooner it will change. But change is coming, and we have to prepare for it. What was the result of ending this triangle? It's terrible. You want to know what we did before that triangle? It's terrible. Are we doing that again? Let me take some of these off here. But we go back to this triangle for a second, and we look at what we did before and after. Quite remarkable that it wants to be within this tiny little confinement area, roughly.
Things are changing now, of course. Wow, that's the high that they make inside of the Wyckoff that really gets identified as that resistance. It starts off by getting that initial support test and then getting tested multiple times from the underside. Some of these older lines we can go ahead and take off. Um, the same distance out of both sides of the triangle. A little bit more out of the bottom. I remember the negative response to the red yellow lines. Same kind of characteristic we can see here. It doesn't mean that they don't break. It just means that they don't want any chasers part of the break. Like think about how, if you were tasked with having to describe, you know, how we could break trends without wanting chasers to be part of it. Well, one way that you could do that is create a consolidation and then break out of it to the trend and then wipe out the whole breakout and then break the trend. What does that tell us? It tells us that the people that were in before the breakout were valued, and anybody that tried to chase it, the market didn't want in because it overlapped them and made them into losers. So, do you think it would do that to people that are meant to be the in for the best price? And why does it seem to allow some people to remain in while others get made into losers before getting to see the same profit? You know, it really, really raises that question. Yeah. So it just hit that B point in the short term? Have some major ones up top there. Here, I'll be back in about like 5 minutes or so. 2 seconds. Alrighty, sorry about that. So it looks like we've broken the trend after a negative response. Mm-hmm. Yeah. What's that, sorry? Mm-hmm. The short term, yeah. Hey. Uh-huh. No, 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 no. Oh yeah? Yeah. Yeah, I'll have to look into it, yeah. Oh yeah. Yeah, I will, I will. Hmm. Basically doing the retest right now and getting the B point right now. Yeah. It is untested still, roughly around the 61 right now. It looks like. Also the low of the node here. Yeah, it's like it's kind of come back to a VWAP from the consolidation here. And we're almost at that first B point out of the two. Basically at the low of the volume still here. An area that could have wicks and spikes. And not particularly a good area for new entries, but just monitoring the playout of the B points down below. And of course, as those hit, newer B points will form at the highs, which are pretty much just as dangerous as these ones. Interesting. And that's also and after these levels, I do think that the yellow line will be something that we'll be watching for shortly after. But yeah, I'm gonna end the stream for now. If you guys wanna join up, just message me and I'll on as soon as I can. Have a good one.